Hello and welcome to the CNBC TV 18 special CEO dialogue. We're coming to you from London in partnership with the UKIBC and KPMG. It is our privilege to have with us some of the leading lights of both India and the UK who've just come away from the Prime Minister's meeting. They've met with both Prime Ministers Modi and David Cameron to talk about the economic and business agenda. There's been a lot of talk about potential. There's been a lot of talk about promise. Prime Minister Cameron says we need to be partners in prosperity. Prime Minister Modi has said that the UK needs to actively participate in developing India's many programs, whether it's Make in India or Smart Cities. But what is all of that going to actually translate into in terms of foreign direct investment? What is that going to mean in terms of job creation on either side? What is it going to mean in terms of being able to really up bilateral trade, which has sort of paled in comparison to what we've seen UK do with other trading partners and India do with other trading partners as well. To talk about all of that and the road ahead, I have with me a very, very special star cast here joining us in London at the KPMG Private Members Club. As I said, the CEOs have just come away from the meeting with Prime Ministers Modi and David Cameron. Patricia Hewitt, let me start by asking you, and there was a lot of expectation of what the outcome would be at the end of this visit. A lot of talk around rumoured numbers. We now do have an official number. It's £9.3 billion. 11 MOUs have been signed. There is a little bit of disappointment. People were expecting a lot more. But I know both sides have sort of tried to stay away from chasing a target and putting a number in terms of what this partnership could lead to. How would you respond to the fact that there is disappointment over what has gotten done at the end of this?
If there's disappointment, I think it's entirely misplaced. The reality is that the United Kingdom is by a very long way the largest G20 investor in India already. India, of course, is the third largest foreign direct investor into the UK. And the deals that we heard announced yesterday, Vodafone's increased investment, for instance, a healthcare investment into India that's potentially worth £1 billion. These are very big, significant deals. But even more important was what we heard from Prime Minister Modi at the Guildhall last night, and then again in a lot of detail at the CEO Forum this morning. And it was very clear that the reforms are continuing in India, that there really is a welcome to British business, and what we were hearing was more businesses determined to support India in its development path.
Let me ask you about the specifics, and we do know that the government has made several attempts to try and liberalise sectors even further. In fact, just ahead of the Prime Minister's visit to the UK, several more attempts were made on the FDI liberalisation front across 15 different sectors. The impediments for the UK to invest in India across sectors like retail, defence, do you believe that some of those concerns have been addressed by these latest moves?
These latest announcements are hugely welcome, and I think the timing is very significant just before Mr. Modi's visit here. What we saw when single brand retail was originally liberalised, it was a British company, Pavers Shoes, that was the first to do 100% investment in its very successful shops in India. The announcement earlier this week about e-commerce in single brand retail, again, is going to be of great benefit to Indian consumers. And Amitabh Kant, the DIPP secretary, made the point at the forum this morning that already about 92% of FDI came through the fully automatic route. That, as a result of this week's announcements, will have gone up to 95, 96%, or indeed even more. So what we identified at the forum this morning was further steps that need to be taken by both governments to ensure that there is as much ease of doing business as possible in order to keep driving through that investment and the job creation that goes with it.
Well, that's good to hear. Analjeet Singh, let me ask you the question now. And we just heard about some of the concerns of the UK companies being addressed. But what were the concerns, if any, that were put on the table by Indian CEOs, both in terms of market access, in terms of opportunities that they can capitalize on, the operating environment? I know visas continue to be the big bugbear and the big issue. But beyond that, specifics that you believe have been addressed in some meaningful way at the end of today?
You see, forums like this, you talked about the deals that were signed. So first of all, I don't think that the deals that were signed were the end-all objective of such a meet or a prime minister's visit to, a state visit to a country. Besides, these deals will spawn external economies and setting up ecosystems, so those numbers are not factored into your 9-10 billion. And also, as far as the Indo-UK CEO Forum is concerned, these are enabling forums. Lots of new ideas came on the table, and I can tell you two things that I want to say relative to other forums that I've been on. One, and I said this at the forum, the tone at the top, which means from the Prime Minister, and I'm talking about the business component of this whole trip. The tone at the top, I have never seen to be so vibrant, so decisive, and so go-to in the last 20 or 30 years. So I think that we have to have some faith in that. And secondly, Mr. Misri put a forum together, very, very well crafted, very well disciplined, and so on and so forth. So we have our work cut out for us. 6 or 7 groups have been formed. Now our work is to connect the dots. Lots of dots were talked about. They will lead to action, I have absolutely no doubt. And, there was some receptivity in suggestions being made around doing ease of business in India on the lines of, I quote a recent judgment of the Bombay High Court as regards Vodafone, not the retrospective one, the other one. And I'd like anybody to tell me in this room, when have they seen a government cabinet decision not to appeal such a outcome? It has never happened before.
But was this issue raised at the CEO Forum?
Yes, it was raised, and it was shown as an example of how other approvals, which are more administrative in nature and don't have the remit of a constitutional authority, can also be decided by a group of secretaries, joint secretaries, a department, a ministry, or whatever, and then taken to a group of ministers and get cabinet not to move ahead, so that we have a time-bound manner in which we can work. And there, a time frame is given to applicants to say 60 days, 90 days, 4 months, 5 months. So, these forums give energy and set a pace to start thinking like that. They're not sort of one-stop deals where something was announced or something's going to happen tomorrow. And I think that was, to me, the biggest outcome of the day and a half that we've spent here.
That's good to hear. And Windy Banga, let me ask you that question, because one of the concerns that foreign investors, and not just from the UK, but foreign investors have with regards to investing in India, is that despite what the government has said on ending the era of retrospective taxation, the legislation continues. Do you believe, as Analjit Singh was saying, that today, on the back of more assurances from the Prime Minister at the forum, there is less of a concern in corporate boardrooms, especially here in the UK, about tax?
Well, I think there's not going to be any instant change. But I think the important thing, as Analjit was saying, is that this was a meeting of 40 CEOs, 20 from each side, 2 prime ministers present, senior ministers present. 6 basic sectors were identified, which will be worked on by subgroups from both sides to actually figure out how to capitalize on the opportunities. That's the stuff that's really going to result in positive growth. One of the themes there was ease of doing business, and I can assure you that consistency of taxation figured pretty high on that. This was a message that's been received by all. I think consistency of taxation is really important for an investor anywhere in the world. I think the message has been received. I think the other thing that I heard today from both prime ministers is that they're going to convert this into an annual dialogue. This is what India has done with many other countries like Germany and so on and so forth. And I think for the first time, the 2 prime ministers are going to have this kind of business dialogue once a year. And I would suggest that that would give an opportunity to do a sense check on the progress, because you can't keep talking about the same issue every year. So I would hope that this is now high up on the radar.
Okay, let me talk about one of the areas of opportunity. And Rana Kapoor, you've just signed an MOU with the London Stock Exchange, financial services, the big area of opportunity. There has been a financial dialogue between both sides that's been on for several years now, if I'm correct. Jerry Grimstone on the side of the UK and Uday Kotak leading talks from India. What more do you believe needs to be done on the financial sector side to be able to grow this partnership further? Any specific areas that were brought up in your conversations with CEOs here today?
We've had an excellent interaction. First and foremost, that Yes Bank is playing a role in terms of being able to build a green bond market, to create infrastructure bonds which can be listed on the London Stock Exchange. And we had a pilot in August which did very, very well. Out of 120 countries in the world, emerging countries, it was a kind of a standout. So we are now propagating the partnership to see how we can do larger transactions and become like a role model bank from India into UK on the London Stock Exchange, number one. Number two, how can we get more equity raising? Because please understand that India's future lies in capital raising. The single biggest important point is that UK is the bastion of capital, right? So as the center point of capital, how can we catalyze and create capital movement? Private equity, like Vindy said, how can we create more investments in India, like 550 foreign portfolio investors, FPIs are there in India, who invested about 20 billion. It's not enough. So India needs technology. India needs, lots of FDI investments. But most of all, that we must understand that the real game here is how to get capital commitment, strategic investments, and to get portfolio investors to invest more in India. And I think this is the center of the world which has the ability. So our tie-up with London Stock Exchange is a, tectonic movement to create more rupee capital, to get rupee bonds listed in the rest of the world, and to create a new market for bonds, first time ever. So I'm very happy with this visit.
Well, since we're talking about bonds, yes, and that was one of the big announcements that the Prime Minister made. And of course, the railways will be also tapping the masala bond route. But then let me continue that conversation on financial services. Is there enough that India has put on the table to actually make it attractive? Insurance, yes, we've hiked the FDI cap. Now there seems to be at least certainty and clarity as far as the control and ownership regulations are concerned. Existing joint venture partners are hiking their stake in their JVs. But beyond that, from an asset management point of view, given the opportunities that we see in the pension sector, has enough been put on the table by the Indian government to get people interested?
I think, Shireen, we have to answer this in two ways. One is what we do in India for India. And a lot of the reform we need in India is for within India, which is our Pension Act, our insurance investment profiles, which will enable our pension funds and our insurance companies to invest in longer tenured project finance type of deals, and really to build our own corporate bond market. And the role which the UK has, in fact, been engaging in over the last decade, and one which we need to certainly deploy more seriously now, is what should that corporate bond market look like in India? So it's beyond just capital flowing, and Rana's right, we need every piece of engagement that we can have with the UK in terms of flow of funds, but we also need the understanding and the technology that the UK can provide on what that should look like. I believe we have a real opportunity now. We have seen the announcement of the railway bonds and, the rupee bonds, the masala bond market opening up. I think the opportunity for us in India will be to demonstrate through the public sector companies that there is going to be a rationalized issuance, and we build our yield curve, build our maturity. We don't have all these companies flooding the market together, and create a proper corporate bond market. In doing that, we will attract more capital from here. Now, if you look at the scale of what we need to do, renewables, 100 gigawatts of solar, 75 gigawatts of wind, this is going to require over $1 trillion, and the Indian banking system does not have it. It cannot provide this with the state of the public sector banks the way it is. We need capital from offshore markets. And the way this has to come is green bonds, and I'm really delighted to see the engagement of Yes Bank with the London Stock Exchange. But we need many more such engagements. We need to have a vibrant green bond market. We need to participate in getting this finance in. But it's not just about finance. We will need the audits, the ability to define what is green and what is not. So there's a huge skill set that we need to upscale for, which we have not done, and look at creating this market for ourselves in order to finance the sustainable end and the renewable end of business.